For decades, Ryanair and Boeing were the ultimate aviation partners. Ryanair's entire fleet built on the Boeing 737, a model of efficiency and cost-cutting. The airline's unwavering commitment to a single aircraft type allowed it to streamline operations, train crews faster, and keep maintenance costs at rock bottom. This close relationship made Ryanair synonymous with the Boeing 737, and the two companies seemed inseparable. This single-type strategy made Ryanair a global low-cost leader and one of Boeing's most prized customers. The airline's relentless focus on efficiency helped it dominate the European market, offering millions of passengers affordable travel options every year. But now, Ryanair's outspoken CEO Michael O'Leary is shaking things up, openly considering Chinese-made planes from Comac. O'Leary, never one to shy away from controversy, has made it clear that he's willing to look beyond traditional partners if it means getting a better deal or more reliable deliveries. This isn't just a business move, it's a challenge to the long-standing Boeing-Airbus duopoly. For decades, these two giants have controlled the skies, but Comac's entry could disrupt the entire industry and force established players to rethink their strategies. The idea of Ryanair flying Chinese jets would have been unthinkable just a few years ago, but today, it's a real possibility. As global supply chains shift and new players emerge, Ryanair's willingness to consider Comac signals a new era in aviation. O'Leary's pivot signals that loyalty in aviation is fading, price, performance, and availability now rule. Airlines are under pressure to adapt quickly, and those who can't keep up risk being left behind in a rapidly changing market. Ryanair's flirtation with Comac could rewrite the rules of global aircraft manufacturing and send shockwaves through the industry. If a major airline like Ryanair makes the switch, it could open the door for others to follow, accelerating competition and innovation. This move isn't just about planes, it's about geopolitics, trade, and the shifting balance of power between the U.S. and China. The decision could have ripple effects far beyond aviation, influencing international relations and economic strategies. Could the skies soon be filled with Chinese jets? And what would that mean for the future of air travel and global politics? As Ryanair weighs its options, the entire world is watching to see which direction the airline and the industry will take next. Ryanair's relationship with Boeing was once a textbook case of mutual benefit: massive orders, low prices, and operational simplicity. For years, the two companies thrived together, with Ryanair relying on Boeing's dependable supply of aircraft to fuel its rapid expansion across Europe. The partnership was so close that Ryanair's entire business model was built around the reliability and efficiency of Boeing's planes. But cracks have appeared. Boeing's safety scandals and repeated delivery delays have left Ryanair scrambling, cutting growth forecasts and disappointing millions of passengers. The once seamless flow of new jets has been disrupted, forcing Ryanair to adjust schedules, cancel flights, and rethink its ambitious plans. Michael O'Leary's public frustration with Boeing's management is mounting, as delays cost Ryanair millions and force it to fly older planes. O'Leary, never one to mince words, has openly criticized Boeing's leadership, warning that continued setbacks could threaten Ryanair's competitive edge. The U.S. China trade war adds even more uncertainty, with O'Leary threatening to cancel orders if tariffs drive up costs. Global politics now play a direct role in Ryanair's fleet decisions, making long-term planning even more difficult for the airline. Ryanair's business depends on growth and low costs. Any supplier threatening that is a liability. The airline's razor-thin margins leave little room for error, and every delay or price increase puts pressure on its bottom line. The partnership now feels unreliable, and Ryanair is no longer willing to be at the mercy of Boeing's problems. The trust that once defined their relationship has been replaced by skepticism and a growing sense of urgency. The airline's search for alternatives is driven by urgent need, not just negotiation tactics. Ryanair is actively exploring new suppliers, evaluating different aircraft, and considering options that would have been unthinkable just a few years ago. Ryanair's willingness to look beyond Boeing is a warning to all suppliers: deliver, or risk losing even your most loyal customers. The message is clear: reliability and performance are non-negotiable in today's competitive airline industry. The era of unbreakable airline manufacturer loyalty is over. Airlines are now prepared to walk away from long-standing partnerships if their needs aren't met. Ryanair's next move could set a precedent for the entire industry, signaling a shift in power dynamics and reshaping the future of airline manufacturer relationships. Enter the Comac C919, a Chinese jet designed to rival the Boeing 737 and Airbus A320. For Ryanair, the appeal is clear: lower prices and faster delivery, with O'Leary eyeing discounts of up to 20%. Billions in savings could mean even cheaper fares for passengers and a major competitive edge. Comac's promise of timely deliveries is especially attractive as Boeing and Airbus struggle with backlogs. The C919 uses proven Western components, easing concerns about reliability. Ryanair's interest in Comac is both a genuine search for alternatives and a powerful bargaining chip. Whether or not a deal happens, the mere consideration of Comac has already shifted the industry conversation. Tempting as it is, buying Chinese jets isn't simple for Ryanair. On paper, the idea of diversifying its fleet and breaking the Boeing-Airbus duopoly might seem like a bold, cost-saving move. But the reality is far more complicated, with layers of risk and uncertainty lurking beneath the surface. The C919, China's flagship jet, still lacks a global track record, unlike the tried and tested Boeing and Airbus models that dominate the skies. Airlines and passengers alike are wary of unproven technology, and regulators in Europe and the U.S. have yet to fully certify the aircraft. Introducing a new aircraft type would disrupt Ryanair's single-fleet model, which is the backbone of its efficiency. It would mean retraining pilots and crew, stocking new spare parts, and building fresh support systems from scratch, potentially erasing any cost savings and adding layers of operational complexity. Politically, the move is fraught with danger. U.S. lawmakers have already raised alarms about national security risks and Comac's alleged military ties, putting Ryanair in the crosshairs of international scrutiny. A Ryanair-Comac deal could trigger U.S. sanctions or economic retaliation, dragging the airline into a geopolitical crossfire that could threaten its business relationships and reputation. The risk is real. A commercial decision could easily spark a diplomatic crisis, with Ryanair caught in the middle of a power struggle between two global superpowers. O'Leary must weigh potential savings against massive operational and political risks, knowing that one wrong move could have lasting consequences for the airline's future. The stakes are high, and the path forward is anything but clear. Every option comes with its own set of challenges, and the margin for error is razor thin. Ryanair's decision could have consequences far beyond the balance sheet, potentially reshaping the airline industry and influencing global trade dynamics. The world is watching closely to see if business pragmatism can overcome political obstacles, or if the hurdles will prove insurmountable. For now, the hurdles are as daunting as the opportunity is tempting, and Ryanair's next move could set a precedent for airlines everywhere. The biggest barrier for Ryanair isn't price or politics, it's safety certification. The Comac C919 is only certified in China. To fly in Europe, it needs EASA approval, a process that could take years. Without EASA certification, Ryanair can't operate the C919 on its core routes. The timeline for approval stretches to at least 2028. Far too late for Ryanair's immediate needs. Geopolitical tensions and regulatory hurdles could delay certification even further. Ryanair can't gamble its future on a plane with no guaranteed entry date. For now, the C919 is more a bargaining chip than a real solution. O'Leary's public interest in Comac is as much about pressuring Boeing as it is about buying Chinese jets. Ryanair's interest in Comac has already shaken the aviation world, hinting at the end of the Boeing-Airbus duopoly. The rise of Comac could usher in the ABC era, Airbus, Boeing, and Comac. If Ryanair orders the C919, it would legitimize Comac globally and encourage other airlines to follow. Increased competition would force Airbus and Boeing to lower prices, innovate, and fix delivery issues. For Boeing, losing Ryanair would be a major blow, signaling deep problems to the market. The entire supply chain would feel the impact, as Western suppliers navigate new risks and opportunities. The aviation marketplace could become more complex, competitive, and dynamic. The old rules are changing, and fast. For travelers, more competition could mean lower fares and better flying experiences. Airlines able to buy cheaper planes can pass savings to passengers, especially on budget carriers like Ryanair. A third major manufacturer would push all players to innovate. Think more comfort, better tech, and new features. But new aircraft types also raise questions about safety and reliability. Passengers will need convincing. Ryanair's move is a symbol of China's growing power and the shifting world order. Aircraft purchases could become political statements, with airlines caught between global powers. The EASA certification of the C919 will be a pivotal moment. If it happens, the ABC era truly begins. Other airlines, especially in emerging markets, will be watching Ryanair's lead. The future of aviation is being rewritten, and Ryanair's bold gamble may have opened the door to a new, more competitive world. For passengers and the industry alike, the next chapter is just beginning.